Power is never lost. It merely changes form, from swords to currency, from battlefields to markets. This statement encapsulates the spirit of Financial CW, one of the rare books that dares to confront the inherent conflict between the US and China, not as a war of weapons, but as a war of belief in the world of global finance. The work doesn't preach or condemn. Instead, it dissects the invisible threads that connect and tighten around the two largest economies on the planet. In an era where financial news fluctuates by the second, where a single tweet can crash markets, this book serves as a reverse map. It doesn't just guide us forward, but compels us to re-examine the path we've already traveled. The work begins with the journey of the dollar, the symbol of American might. From the aftermath of World War II to becoming the world's lifeblood, it then illuminates China's rise, not with guns and bullets, but with factories, stock exchanges, and a determination to build controlled capitalism. Finally, it places these two superpowers before a mirror named the market, where both see their own reflections confident yet terrifyingly fragile. What sets this book apart is how it tells the story of power, not through political rhetoric, but through cold numbers and burning paradoxes. A nation can grow rich by printing money, but it can also lose its soul by believing that money is the answer to everything. An economy can control every variable, but it can never control belief. Reading Financial CW, one doesn't just see two superpowers in confrontation, but the world itself reflecting in that financial mirror, where every interest rate decision, every capital flow, every sanction creates new cracks in the structure of global trust. And the ultimate question the book leaves, perhaps, is also the question for this era. If the world is increasingly connected by money, will humanity still know how to connect through trust? When finance becomes the universal language of humanity, are we losing the ability to listen to each other through an older language, the language of understanding and empathy? On the world's economic map, there is an invisible current that few recognize, humanity's financial bloodstream, colored by the green of the US dollar. It permeates every vein of the global economy, from financial centers in New York and London to cargo ports in Singapore and Shanghai. If the world economy is a living organism, America controls its circulatory system. Every transaction, every contract, every colossal debt is tied to a currency that holds value only because humanity collectively believes it does. A green piece of paper bearing the image of a president becomes a symbol of trust and power. Americans once claimed they didn't need to conquer the world with armies, only with money. Indeed, no empire in history has achieved such profound global influence as the dollar empire. To understand its genesis, we must rewind to the aftermath of World War II. With the world in ruins, the victorious Allies understood they needed a new system to stabilize currency and trade. The Bretton Woods Conference in 1944 was the birthplace of the modern global financial order. In a smoke-filled room in the New Hampshire woods, a man named Harry Dexter White, representing the U.S. Treasury, quietly rewrote the rules of the game for the entire world. White was not a powerful politician, but a visionary economist. He understood that whoever controlled global currency controlled the world. As nations agreed to peg their currencies to the dollar, and the dollar to gold, the U.S. became humanity's central bank. The stability of the U.S. dollar after the war earned the trust of the entire world, and that trust quickly transformed into dependency. From then on, the dollar was not just a means of payment, but the anchor of the international financial system. It allowed the U.S. to borrow cheaper, spend more, and print money without fear of immediate consequences. While other countries had to accumulate dollars to buy goods, repay debts, or protect foreign exchange reserves, Americans merely had to issue more bonds. What others saw as a debt burden, the U.S. saw as a privilege. French President Valéry Giscard d'Estaing once called it the exorbitant privilege of the dollar. But this power did not come naturally. It was nurtured by four pillars meticulously built by the United States: a stable legal system, open trade policies, deep and transparent financial markets, and global payment infrastructure. From Wall Street to the Federal Reserve, from investment funds to the banking system, all linked into a colossal network sustaining the belief that the dollar was absolutely safe. The world was willing to deposit its savings in the U.S., And the US used that very money to invest everywhere, a perfect circle of power, both self-nurturing and self-reinforcing. When trust became currency, every other nation became an invisible debtor to Washington. However, like all empires in history, the dollar's greatness also began with a series of coincidences. Many steps were not due to perfect planning, but to opportunity, error, or even audacity. For example, in the 1950s, when Europe faced a shortage of foreign currency, banks in London began trading Eurodollars dollar deposits held outside US territory. This opened the door for the dollar to transcend national borders, becoming a global asset. The US initially did not control this trend, but quickly recognized its power. They let the money flow freely, and the world became even more deeply drawn into the dollar network. In the years that followed, as economies recovered and trade boomed, all international transactions had to pass through the dollar, the common language of globalization. The more the world trusted, the stronger America became. While other nations had to reserve dollars, the US could issue debt and still be considered safe. Even in crises, investors fled to the dollar, much like people seeking refuge in a sacred temple during a storm. This is the strange paradox of financial power. The more unstable things became, the more America benefited. From the Cold War to globalization, from the oil shocks to the Asian crisis, the dollar always stood at the center of every financial earthquake. But in those early decades, few saw the price to be paid. They only saw America's strength, not realizing that the world was pouring all its trust, all its assets, all its hopes into a system that would only stand firm if that trust did not collapse. I once worked on trading floors where billions of dollars changed hands in seconds. Every time I saw the flashing ticker, I remembered that those numbers weren't just profits or losses, they were the pulse of modern civilization. When one nation sneezes, a host of other economies can catch a high fever. And at the heart of every fever was that tiny green paper, which humanity had chosen to believe in as if it were truth. We often say money is a tool, but in reality, it has become a modern religion. People believe in the dollar not because it's backed by gold, but because they believe others will also believe in it. This fragile yet persistent trust has maintained American power for nearly 80 years. The world entered the new century with financial ties more intricate than ever. The dollar was no longer solely America's currency, it was everyone's, yet it served one nation first and foremost. And when a currency becomes hegemonic, history always demands a debt the price of imbalance, of trust exploited to its very core. In the next pages of this journey, we will see that this power is not an eternal gift. Every empire eventually falters, and so does a currency empire. But at this stage, the world was still captivated by the seductive illusion of prosperity it offered, not realizing that behind every dollar lay a promise no one was sure could be kept indefinitely. When people place their faith in money instead of values, when numbers replace morality, that's when currency begins to become the biggest and most dangerous story of the era. By the early 1970s, the story of the dollar took an unexpected turn. After nearly 3 decades of pegging its value to gold, America began to feel that chain was too heavy. War costs, budget overruns, and inflation caused the gold reserves at Fort Knox to dwindle. The world was bewildered, but President Richard Nixon chose a bold move. He severed the link between the dollar and gold. When the gold standard collapsed, the dollar should have lost value, but instead, it survived, stronger than ever. For the first time in history, a currency not based on any physical commodity was accepted worldwide. From that moment, trust became the sole backing for the value of money. And because the US possessed the greatest trust, they also wielded absolute power. The world began to live in a financial system with no fixed anchor. Interest rates fluctuated like ocean waves, currencies swayed like crowd psychology. But instead of collapsing, this system ushered in an era of financialization, where assets and debts swelled like bubbles. The US became lender, consumer, and money printer all at once. Meanwhile, emerging nations from Latin America to Southeast Asia were forced to accumulate dollars to protect their economies. They imported dollars like a sedative but became addicted to it. Every time the US Federal Reserve changed interest rates, capital flowed like a flood across borders, sweeping away small economies. The dollar became a soft weapon, striking fear across the globe without firing a single shot. Crises followed one after another. Debt crises in Mexico, Asia, then Russia. Wherever the dollar flowed, there was a risk of collapse. But the paradox was that whenever a crisis occurred, people ran back to the dollar, like an addict returning to the very thing that caused their suffering. Trust and fear were bound together in the same thread, and America held the end of that thread. I witnessed that feeling in the eyes of investors in Hong Kong or London. When the market swayed, they didn't look at each other, but at the Fed, where a few people could press a button and change the fate of billions. An interest rate hike in Washington could cost millions in Jakarta or Buenos Aires their jobs. That was a power no nation had ever possessed. The U.S. became the planet's ultimate consumer. Other nations produced goods, while the U.S. paid with the paper it printed. Goods flowed into the U.S., and dollars flowed out to the world. This perfect cycle made the entire system run like a perpetual machine, but only as long as no one stopped to ask where the real value lay. And when asset bubbles burst from real estate to stocks, everyone blamed greed, banks, or hedge funds. Few bothered to look deeper. The root cause lay in the structure of the global financial system, where the dollar was the center and everything else was merely a satellite. Every nation, big or small, was forced to play a game whose rules it did not set. This dependency created another kind of crisis, a crisis of trust. When money was born from nothing, when debt piled upon debt, who could still believe in numbers? But instead of retreating, the world plunged deeper because there was no other choice. The dollar was not just the system's blood. It was an addictive drug constantly administered to keep the global economic body from dying. I remember once at a conference in Switzerland, a young economist asked me if the world could exist without the dollar. I replied that it could, but it would have to learn to breathe again with its own lungs. The entire room fell silent. Everyone knew it was true, but no one dared to imagine the cost of addiction withdrawal. When the dollar became a religion, America became its high priest. They bestowed belief, determined value, and every other nation had to obey the financial dogma written by Washington. The IMF, the World Bank, the International Payment System all were designed around a single center of power. However, cracks began to appear. As the U.S. overspent, as public debt piled up, as workers in Detroit lost jobs because factories moved to Asia, Americans began to realize that the dollar's privilege was also a curse. Their prosperity was based on borrowing, and the world had grown accustomed to buying U.S. debt as a purchase of security. The ironic truth was that the very system they created to control the world was gradually slipping out of control. Everything became fragile. A crisis in the U.S. could shake the entire globe, and the U.S. itself had no escape from the repercussions of the power it had created. The dollar became a double-edged sword, both a symbol of power and a source of instability. But no one could stop. The world still needed it, and the U.S. still had to print more to maintain the illusion that everything was fine. I once likened this system to a colossal glass building, bright on the outside, fractured on the inside. Everyone saw the light, but few dared to touch the wall to feel the coldness. The prosperity of the globalization era was not built on solid ground, but on a fragile layer of trust covering mountains of debt. When trust becomes an asset, every shock is a mortal threat. A presidential statement, a tweet, a GDP report all could send global markets reeling. And through every tremor, people still sought refuge in the dollar, like a deity who both blesses and punishes. The story of money's power doesn't stop with America. It has become humanity's story, the story of how we turn numbers into power and power into belief. But belief, as history has proven, is not immortal. And as the cracks spread, the question is no longer how long the dollar can maintain its position, but who will bear the consequences when it collapses. No one wants to confront that question, but it still hangs over the global economy like an unburst storm cloud. Who will pay the price for the prosperity the dollar has brought? The nations that rely on it to survive, or America itself, the one who built the throne of paper? Observing the market from within, I realized that this system resembles a puzzle game where each player believes they are smarter than the others. The U.S. thinks it controls the world through the power of its currency, while the rest of the world believes it benefits from the stability the dollar provides. But neither realizes they are sitting in the same boat with a hole in the bottom. Because to keep the dollar at the center, the US is forced to accept one condition: it must always spend more than it has. Every year, hundreds of billions of dollars leave the US to pay for imports, investments, and aid. And it is this very money that flows back into the US in the form of investments in bonds, stocks, and real estate. This seemingly perpetual cycle of the dollar is based on a fragile assumption that the world will forever trust America. Yet, trust is not something that can be printed like money. As crises followed one after another, from subprime mortgages to dot-com bubbles to the global financial crisis, people began to question why a nation could continuously spend beyond its means and still be considered a model of stability. This question was not just skepticism, it was the seed of rebellion. On the other side of the globe, emerging economies struggled against the dollar's volatility. Every time the Fed raised interest rates, they lost billions in reserves. Every time the US printed more money, their commodity prices fluctuated wildly. And then, in the 2008 crisis, the world witnessed something unprecedented. Even the US could not escape the consequences of the very system it created. The global financial crisis was not just the collapse of banks, it was the collapse of faith in market fairness. When Lehman Brothers went bankrupt, when millions of Americans lost their homes, when trillions of dollars evaporated, the world realized that money was not neutral. It had an owner, and that owner, however invisible, always knew how to protect its interests. The US printed money to save itself, while the rest of the world paid the price with inflation, unemployment, and inequality. And when the dust settled, people called it a natural market adjustment. But I knew it wasn't an adjustment. It was a painful transfer of suffering from the strong to the weak. That's when I began to call this period the financial Cold War. No gunshots, no falling bombs, only silent capital flows, sanctions, and monetary policies transformed into instruments of power. Here, the victor wasn't determined by who had the largest army, but by who controlled market trust. The dollar became the most potent weapon America ever possessed. No attack was needed. Merely withdrawing liquidity, cutting off access to the payment system, or raising interest rates could subdue a nation. This power was more subtle than any weapon because it made the victim believe they were falling on their own. But while the world trembled before this power, another crisis was quietly unfolding within the US itself, a crisis within society. Wealth concentrated at the top of the pyramid while the foundation cracked. Those holding financial assets grew ever richer, while the working class gradually lost faith in the American dream. When money was cheap for too long, the value of labor became meaningless. Warren Buffett once said, "There's been class warfare for the last 20 years, and my class won." He wasn't joking. The American financial system, nourished by the dollar's privilege, had created a country where inequality was no longer a moral issue but a mechanical consequence. Money begot money, while hard work begot only debt. Meanwhile, across the Pacific, China, once a student of Western economics, began to mature. They observed, learned, and then attempted to build their own system, a model of capitalism with Chinese characteristics. As the US sank into a crisis of confidence, China emerged with a new belief that they could do better. But what I want to emphasize is not who won or lost, but that the world was being pulled into a vortex from which neither superpower could escape. America needed the world to continue believing in the dollar to maintain its strength. And China, with trillions of dollars in reserves, was also tightly bound to that system. They were both rivals and hostages. That is the paradox of our era. Every nation knew the system was distorted, but no one dared to change it because change could bring everything crashing down. Looking back at history, I see this conflict is not new. It has merely changed form, from a war of weapons to a war of currency, from lead bullets to interest rates, from territorial borders to financial frontiers. Humans continue to repeat old instincts, vying, seizing, and then convincing themselves that it is progress. And perhaps the most painful thing is that amidst colossal numbers and glittering headlines, we have forgotten that money was originally created to serve people, not for people to serve money. The story of the dollar, therefore, is not just the history of a currency, but a mirror reflecting how humanity defines power, trust, and value. As the world continues to operate in the blind rhythm of profit, as markets increasingly resemble giant, gilded casinos, we must ask ourselves, are we earning money, or are we gambling away our own future? because every empire will eventually have to pay the price for the trust it sold. And if that day comes, the price will not just be monetary, but the collapse of an era that believed humans could control the world merely with numbers printed on green paper. On May 1, 1421, ceremonial drums echoed across the vast courtyard before the Fengshan Gate. Thousands of officials, envoys, and soldiers stood in neat rows amidst thick incense smoke. In that setting, Emperor Yongle ascended the stone steps. Light shone upon his golden dragon-embroidered imperial robes, reflecting onto the glistening jade-tiled floor. The Forbidden City had just been completed, the new heart of Chinese power. It was not just a palace, but a declaration of an empire that believed itself to be at the center of the world. At that time, China was the wealthiest and most civilized nation on the planet. They had paper, gunpowder, compasses, printing, and an administrative system that Europe would take centuries to catch up with. From the fertile delta fields to the ceramic workshops, from the merchant networks along the Yangtze River to Zhang He's fleets crossing the Indian Ocean, everything expressed the belief that there was only one center under heaven: China. Yet, even in that most glorious moment, the seeds of decline had begun to sprout. When Zhang He returned from his magnificent voyages, the court issued edicts to destroy ships, ban sea travel, and close itself off from the world. The absolute self-confidence of a colossal civilization transformed into complacency. While the West entered the Renaissance, China retreated into a shell of conservatism. The soft power that once conquered the world gradually fractured, until centuries later, its doors were blown open by the cannons of European powers. The Opium Wars marked the beginning of a period the Chinese called the Century of National Humiliation, 100 years of shame. Ports were forcibly opened, territory was carved up, and the populace became objects of exploitation for foreign powers. In their eyes, the civilization that was once the light of the world was now merely a shadow of its past. China slid from the first world to the third world, a centuries-long fall. From those ruins, revolutionary movements arose, sometimes violent, sometimes blind. The Taiping Rebellion, then the Xinhai Revolution, then the civil war between nationalists and communists. All carried a burning desire for revival. When Mao Zedong stepped onto the historical stage, he brought the promise of equality and collective strength. But like all extreme social experiments, the Great Leap Forward turned ideals into tragedy. Barren fields, rusty factories, millions dying of starvation. The Cultural Revolution that followed shattered what little intellectual value remained. China hit rock bottom, not just economically, but in a crisis of spirit. Trust was replaced by fear, intellectuals were persecuted, traditions distorted. At that time, few believed that this nation could ever again hold its head high. But within the desolation of ideology, tiny seeds of life remained. When Mao died, the closed door began to creak open. In 1978, a small man, speaking slowly, stood before the party central committee and declared that it doesn't matter whether a cat is black or white, as long as it catches mice. This seemingly simple statement gave birth to an unprecedented pragmatic mindset in Chinese politics. Deng Xiaoping understood that to survive, the country had to relearn how to get rich, to step into the world instead of shying away from it. His southern tour in 1992 became legendary. As he passed through Shenzhen, seeing young industrial zones rising from barren land, he declared, "To get rich is glorious." That statement was like a historical decree, unlocking all the repressed energy in society. Farmers, merchants, engineers, everyone wanted to be part of the new wave. China entered the fastest period of transformation in human history. But Deng was not just a reformer, he was also a man of memory. After a century of humiliation, what China feared most was chaos. Therefore, his new model was not absolute freedom, but socialist-oriented market economy, meaning the market was allowed to operate within state-controlled fences. It was a fusion of pragmatism and discipline, of opening up and control. As Shenzhen became a symbol, dozens of other special economic zones sprouted up. Millions left their villages to seek opportunities in cities. Colossal factories lit up all night, producing everything from shoes to phones. China became the world's factory, trading growth for the sweat and endurance of hundreds of millions of people. This rise was both magnificent and tragic. Then, in 2008, the world turned its gaze to Beijing. In the Bird's Nest Stadium, fireworks exploded brilliantly, lighting up the sky. A nation once called the Sleeping Giant now stood tall, radiant, and confidently declared its return. The image of the bird's nest became a symbol of China's rebirth from ashes to zenith. But beneath that light, a question silently lingered. Was this rise sustainable? Could an economy built on cheap exports and arduous labor last? How far could a society that simultaneously opened itself to the world and feared losing control go? These questions remained unanswered, but what was undeniable was that China had redefined the meaning of power. From being a victim, they learned to become a shaper. From being isolated, they learned to seize power in a new order. It was not just a story of economic reform, but the rebirth of a civilization that once dominated, then fell, and then rewrote its own destiny. Every rise demands a new architectural order. After emerging from a prolonged coma of collectivism, China began to redesign its economic body, every financial artery, every productive cell. They did not fully copy the Western model, but chose a hybrid approach between market and state. In this process, trust became the scarcest asset, because no society can change so quickly without psychological upheaval. Financial reform was the first step towards self-confidence. When state-owned enterprises became too cumbersome, the state encouraged them to go public, meaning corporatization, listing, and offering shares. Thus, the first stock exchanges were born in Shanghai and Shenzhen. But unlike in the West, where financial markets originated from the natural trust of civil society, in China, they were born from state decisions. Companies went public not entirely out of competitive necessity, but because they were guided to modernize. The state played the dual role of teacher and gatekeeper. Enterprises chosen for listing were often state-owned enterprises or conglomerates with close ties to the powerful elite. This created a unique structure. The stock market was not a place to assess value, but a place to establish new power in the economy. Individual investors jostled to buy shares not just for profit, but because they believed the state would not let the market collapse. However, this protection also came at a cost. Protection record was the sarcastic term used by many Western observers, reflecting the truth that the state sector was still prioritized, while the private sector had to swim on its own in waters full of unwritten rules. A private enterprise could grow strong, but if it exceeded permissible limits, it would be forced to adjust. Market trust was replaced by political trust, and this caused capital to flow not towards efficiency, but towards safety. The price of money in this context was not just interest rates, it was the cost of maintaining stability. Interest rates were kept low to encourage investment. The renminbi was controlled to maintain exports. The state bank orchestrated like a conductor, keeping the economic symphony from falling into chaos. But that symphony lacked a melody of freedom. When credit was cheap, capital flooded into real estate and overproduction. When growth was considered the supreme goal, everything else, environment, quality, fairness, was relegated. I once met an economist in Beijing who said that in China, interest rates didn't reflect risk but reflected command. That statement was both ironic and accurate. In an economy where money remained a political tool, every credit decision was a message about power. And that very power kept the country stable while the outside world was shaken. They are still building, but will they arrive? This is the question many in international finance ask when looking at China's efforts. The government has invested trillions in financial infrastructure banks, brokerage firms, exchanges, financial technology zones. They invite foreign investors but simultaneously erect thick legal barriers. The market is open, but the door always has a guard. China understands that to attract capital, they need trust. To maintain stability, they must control. These two requirements are often contradictory. Foreign investors want the freedom to withdraw capital, but that threatens a system that is not yet flexible enough. Global companies want transparency, while the government fears that too much transparency will expose shortcomings. The result is a financial world operating in a gray zone, neither fully free nor fully controlled. In this picture, Hong Kong became a vital bridge. As a former British colony, Hong Kong retained its legal system, transparent rules, and currency pegged to the US dollar. After its handover, it became a one country, two systems region where China tested international trust within permissible limits. Chinese companies listed there to raise capital, while the central government used the city as a gateway to global markets. Hong Kong was both a friendly face and a protective shield, but I always knew that a system relying on a bridge would have to ask what happens when the bridge cracks. When political upheavals occurred after 2019, international capital began to withdraw. Investors questioned the future of one country, two systems. Beijing responded by promoting other financial centers like Shanghai and Shenzhen. But trust cannot be transferred as easily as money. China has built a massive financial infrastructure, but deep down, it remains an economy where trust and power have not yet reconciled. The market developed faster than the legal framework, and wealth grew faster than understanding. The economic machine still operated, but each gear carried a slight grinding sound, a sign of tension between freedom and control. Looking back, I realized that China was not just building an economy, they were experimenting with a philosophy. Could market tools be used to serve the will of the state? And if successful, would that create a new model for the world? The answer is not yet clear, but the experiment continues, and every fluctuation on the stock ticker, every change in monetary policy, is the heartbeat of a colossal heart learning to reconcile power and trust, two elements that rarely coexist for long in human history. There is no path of development that doesn't confront paradox. As China expanded its economic borders, it also had to learn to face the truth that power cannot be separated from responsibility. Connecting with the world became a goal that was both urgent and full of doubt. The world needed China as a manufacturing engine, and China needed the world as a mirror reflecting its own value. But in that mirror, the image was not always clear. Connecting China with the world was a strategy rather than a slogan. China launched programs like Shanghai Hong Kong Stock Connect and Bond Connect and gradually internationalized the renminbi. They created their own payment infrastructure to reduce dependence on the US dollar, but maintained flexibility to trade with the rest of the world. International investors were allowed to participate in the Chinese market, but every transaction had to pass through a sophisticated layer of oversight. Trust was granted, not defaulted. On the surface, this was a picture of integration, but beneath the surface, it was a risky balancing act between openness and control. Whenever foreign capital poured in too strongly, the central bank would intervene. Whenever there were signs of capital flight, the government would erect barriers. The market seemed open, but its heartbeat was still measured by administrative commands. The world wanted to believe in China, but trust is something that cannot be bought. "Can buy me love" is a phrase many international scholars use to describe China's predicament, accurately reflecting this paradox. The nation could use trillions of dollars to invest abroad, building railways in Africa, seaports in South Asia, industrial parks in Europe, but it could not buy complete trust, because in those transactions, one could still clearly sense the boundary between power and goodwill. I once heard an American investor say, after a business trip to Beijing, "I'm impressed by the speed, but I'm not sure I understand the rules of the game." That statement perfectly encapsulated the feelings of the entire financial world. China had learned to create wealth, but was still learning how to make the world believe that wealth was built on a solid foundation. Meanwhile, inside this colossal nation, a silent crisis was brewing, the crisis of aging. As the generation born during the mid-century population boom gradually retired, the social security system had to bear an increasingly heavy burden. Who will take care of grandma? This seemingly private question became a societal obsession. For a nation of over 1 billion people, an aging population was not just a demographic issue, but a political, financial, and moral one. "Who will take care of grandma?" spoke not only of retirement benefits, but also reflected the tension between tradition and modernity. East Asian tradition placed the burden of caring for the elderly on the family. But as urbanization spread, as young people left their villages to work in distant cities, that structure began to collapse. The state had to step in, but the welfare system had not yet grown strong enough. Every dollar spent on social security was a dollar less for investment. And when growth was seen as the measure of political legitimacy, social security was often deemed a luxury. Population aging also strained the financial structure. Pension funds had to invest for returns, but in a market still controlled, risks were not correctly priced. A shock could collapse a multitude of funds, and then social stability, the paramount priority, would waver. I once heard a Chinese official say, half jokingly, half seriously, "We can build 100 new cities, but we cannot build another generation of youth." Facing these paradoxes, China continued to move forward like a giant learning to walk a tightrope. They opened up in stages, learned from every stumble, and stubbornly maintained the control they believed was necessary. International initiatives like the Belt and Road were not just economic. They were China's way of trying to redefine its position, from student to teacher, from being led to leading. Yet true power lies not just in money or technology, it lies in the ability to inspire trust in others. And that is a lesson China is still learning. A nation can build railways all the way to Europe, but cannot shorten the distance of trust with just cement and steel. The more it expanded into the world, the more China confronted itself. The control that once helped it stabilize now became a limit to creativity. The self-confidence that was once a strength now sometimes turned into others' suspicion. This is not China's unique tragedy, but the rule of every rising empire. When power increases faster than trust, darkness approaches light. I don't believe China's rise will stop. But I know that to maintain that position, they will have to find a new kind of strength, one that comes not from output or foreign exchange reserves, but from trust and transparency. When money is no longer the sole measure of credibility, when people are considered the center, not a tool, only then will the rise truly be complete. China has learned the art of creating prosperity, but has not yet learned the art of trust. And trust, as history has proven, is the only thing that can transform an economy into a civilization. Rarely in human history have two economies been so deeply intertwined that a sneeze on one side sends tremors through the other, as is the case today. Yet, instead of viewing this as an opportunity for cooperation, the world is turning it into a financial Cold War where money, technology, supply chains, and trust become weapons. No more battleships, no more fortresses, only sanction lists. Tweets that can wipe out billions of dollars in minutes. Geoeconomic warfare begins not with an explosion, but with a series of seemingly rational decisions. Tariffs to protect domestic jobs, export controls on technology to protect national security. But hidden beneath the rhetoric is a silent escalation. Both sides realize that in a globalized world, an opponent's greatest weakness is their own dependence. The U.S. imposes tariffs on Chinese goods, believing it will cripple Chinese factories, but the result is higher prices for American consumers and escalating inflation. China holds trillions of dollars in U.S. Treasury bonds, seen as a financial leverage. However, if it were to dump them, the Chinese economy itself would suffer a severe shock as its reserve value plummets and international confidence wavers. No one wins in this game. There are only spreading spirals of loss. Each side chokes its own wrist, believing it is choking the other. Geoeconomic warfare imposes an extremely high cost on both, and the irony is that it is waged in the name of protecting national interests. Some liken this to a new Cold War. But unlike the last century, when two systems were almost entirely separate, today's economic interdependence makes decoupling almost impossible. Even as Washington calls for reduced reliance on China, millions of small supply chains remain tightly linked to production in Guangdong, Sichuan, or Shenzhen. Conversely, Beijing cannot sever ties with American corporations without hurting itself. Today's world is a network of interdependence. Australia might pay for U.S. imports only because of its trade surplus with China. Cutting one link severs the bloodstream of the entire system. Therefore, this conflict is not just between the U.S. and China, but a global tremor. But behind the policies and charts is a deeper story about the distribution of wealth and power over the past half-century. The world financial order placed the dollar at its center, creating cheap capital for the U.S. and expensive costs for the rest. Emerging nations accumulated dollars to hedge against risk, while the U.S. borrowed that very money for consumption. A perfect, yet deeply distorted, circle. The first front of this financial war is the struggle for resources between nations. The U.S. enjoys the privilege of unlimited borrowing, while other countries pay the price with stifled growth every time U.S. interest rates change. Each time the Federal Reserve raises rates, emerging economies tremble. capital outflows, domestic currencies depreciate. U.S. power needs no army, only a monetary policy decision. The second front lies within each nation: the battle over wealth distribution. In the U.S., market liberalism has created tech giants, but simultaneously pushed millions of workers into being left behind. When the dollar is overvalued due to international demand, U.S. exports lose competitiveness. The rich benefit from capital, while laborers lose jobs as factories move away. Meanwhile, China, despite being a rising nation, also faces similar divisions: inequality between urban and rural areas, between older generations of workers and the new tech class. At a deeper level, the financial Cold War is an invisible conflict over how global wealth is shared. When this imbalance remains unaddressed, economic tension inevitably transforms into political tension. Both superpowers use nationalism as a painkiller, while the root disease, inequality and loss of trust, continues to spread silently. I once stood amidst trading floors, watching red and green numbers flash, realizing that behind every fluctuation lay not just money but fear. Fear of losing power, fear of losing trust, fear of the truth that the world is too interconnected to be separated. The price of power today is no longer measured by land or weapons, but by market trust, something more fragile than any contract. Financial war can be avoided, but to do so, both sides must be brave enough to look in the mirror. Both the US and China carry old beliefs. One believes in the boundless nature of the market, the other in the strength of absolute control. Both forget that in a world where value is measured by capital flows, one side's victory does not mean the other's defeat, but often the loss of all. If there is one thing that worries me most, it is not the sanctions but the lack of imagination. Humans have learned to create weapons of mass destruction, but have not learned to imagine a new model of cooperation, where financial power does not need to be proven through domination. Perhaps the greatest challenge of this era is not to wage war, but to avoid it, not to destroy opponents, but to find a way to survive together in an inseparable world. And that is a lesson every empire, whether political or financial, must learn before it is too late. When the market loses its neutrality, everything begins to slide off its natural trajectory. We once believed that prices were the most honest voice of the economy, that the invisible hand would regulate everything. But then the world realized that hand was not invisible at all. It was guided by self-interest, by policy, and sometimes by fear. I once witnessed trillions of dollars move in a single day, not because people innovated, but because they feared missing out on quick riches. The market no longer reflected value but reflected emotion. And that emotion, amplified by media, algorithms, and cheap money, created bubbles larger than any in history. Selective efficiency is a phrase that accurately describes this reality. The market is only efficient when its incentive framework is correct, when people are rewarded for creating a prosperous system. But when people are rewarded for speculation, the system digs its own grave. From Wall Street to Shanghai, short-term profit has replaced long-term value, dividends have become an illusion, and success is defined by speed, not quality. Giant tech companies rise like myths, collecting data, acquiring rivals, stifling competition. When competition dies, innovation dies with it. In the US, corporations dominate every sector from media to retail, from banking to social media. Profits increase, but investment decreases, wages stagnate. In China, state control creates chosen giants but simultaneously stifles the nascent private sector. Two different extremes, but with one common result: concentrated power leads to instability. Wrong incentives, bubbles, phantom money, these are three inseparable links. When profit is prioritized over value, cheap money becomes fuel. Central banks print money to rescue growth, but every dollar pumped into the system inflates another bubble: land, stocks, cryptocurrencies. All increase in value not due to scarcity, but due to cheap belief that they will always rise. I call this ph-nemony, the currency that mocks reason. People invest not because they believe in the project, but because they believe some greater fool will buy it from them at a higher price. The cycle of greed thus feeds itself until trust collapses. At that point, not only money disappears, but also the sense of security that was once taken for granted. Misaligned incentives create a distorted economy. In the US, the system rewards CEOs with stock, making them only care about the next quarter's stock price, not a 10-year strategy. In China, cheap credit encourages massive investment in infrastructure and real estate, pushing public and private debt to enormous levels. Two seemingly opposing models suffer from the same disease, dependence on artificial growth. And when those bubbles burst, who pays the price? Not the creators, but those at the bottom of the system. Workers lose jobs, savers lose value, young people lose hope. The market, once promised as a path to freedom, now becomes a labyrinth that exhausts everyone. In this context, the market is no longer an objective tool, but a weapon in the hands of power. When central banks decide on interest rates, they not only direct the economy, but also determine the fate of hundreds of millions of people. When tech corporations adjust algorithms, they not only optimize profits, but also control social behavior. And when governments use financial markets to sanction each other, they are turning money something created to connect into a dividing wall. The irony is that amidst this global complexity, every nation believes it can control the waves. America believes it leads. China believes it defends. Europe believes it balances. But the financial ocean has no shores. When a wave breaks, water spills over everything. We are all in the same boat, and every extreme action, no matter how justified by political or moral reasoning, only makes the boat tilt faster. Once people believe they can detach from the global system, they forget that capital markets are not meant to divide, but to connect. The bitter truth is that no economy stands alone anymore. Every interest rate hike in Washington shakes Mumbai and Hanoi. Every real estate slump in Shenzhen keeps investors in London and New York awake. If the market is not reoriented to serve people, it will continue to be a weapon serving power. Money, originally created to measure value, is now used to dictate value. When stock prices are valued more than the value of life, when capital flows are prioritized over human flows, that is no longer an economy, but a system devouring itself. I am not against markets. I just want to remind everyone that the market is not a religion. It is not a god to be worshipped, but a tool that needs to be adjusted. If the invisible hand no longer serves humanity, humanity must be brave enough to put its own hand back on the wheel. True prosperity does not lie in the speed of money flow, but in its direction. And if the world does not change the course of this boat, it will eventually crash into a storm, no matter how spectacular its ride on the waves. Escaping the Thucydides trap is not a slogan but a harsh test of our time. In history, when a rising power challenges the position of an old power, war is almost inevitable. But in today's global financial world, such a war would no longer be confined within borders. It would spread throughout the system, striking every economy, every individual. No one would stand apart. The first thing humanity needs to relearn is the courage to admit its own mistakes. America's complacency made them believe that the free market model was a natural law, infallible. Meanwhile, China's faith in absolute control made them forget that creativity cannot be commanded. These two opposing poles, coexisting in an intertwined system, have created a dangerous spiral of suspicion, protectionism, and endless competition. Neither side is perfect. The U.S., with the dollar at its center, allowed finance to swallow manufacturing, turning the real economy into a shadow of the capital market. China, with its obsession with stability, sacrificed market freedom for speed and control. Both systems made the same mistake, taking power as the benchmark for correctness. And that is what puts the world in a perpetual state of defense. Every step taken by one side is an excuse for the other to retaliate. If this path continues, the world won't need nuclear bombs to self-destruct. A collapse of confidence in the bond market, a global credit crisis, would be enough to bring both giants to their knees simultaneously. We live in an era where mutual destruction does not require missiles, only a loss of trust. That is why I believe humanity needs a new Bretton Woods, a global framework to rebuild the monetary system. This time, not based on the hegemony of any single nation. Such a mechanism must be built on multipolar cooperation, where the dollar, renminbi, euro, and other key currencies share roles in a stable network. A new international payment system is needed, transparent and fair, so that no nation can unilaterally weaponize its currency. The world cannot continue to operate on the assumption that one center can control everything. Risk and power need to be distributed so that no one can manipulate global trust. This is not a dream, it is a requirement for survival. Once we accept that we are bound to each other, we must also accept a simple principle: the mutual deterrence of the market. In the Cold War, it was called mutual assured destruction, mad mutual destruction if one side fired. In the 21st century, that happens not with bombs but with markets. If the US or China tries to break the global financial order, both will collapse together. Stocks will fall, capital will flee, and trust, the only asset that cannot be printed, will vanish. In this era, trust is the energy unit of the economy. Without it, every system collapses, every political model becomes meaningless. And trust cannot be maintained by threats or coercion. It needs to be nurtured with transparency, fairness, and mutual respect. But all of that will remain mere theory without one final element: leadership. Every reform begins with those who dare to take responsibility. Not leadership for acclaim, but leadership that dares to go against the crowd, dares to say, "We were wrong." The world can avoid a financial Cold War only if there are people brave enough to prioritize the interests of humanity above narrow self-interest. I believe the true leaders of this century will not be remembered for whom they defeated, but for what they prevented from happening. They will be those who understand that peace is not the silence of guns, but the stability of trust. Looking to the future, I don't see a world divided between the US and China. I see a world finding its balance after centuries of imbalance. It is an arduous journey, for it demands that humans relinquish what they worship most: the illusion that they can control everything. The financial Cold War is not destiny. It is a choice, and like every choice, it demands responsibility. If we continue to use money as a weapon, trust will be the first casualty. But if we know how to transform financial power into a foundation for cooperation, the market which once divided the world could become what saves it. In an era where AI systems and automation are replacing humans in economic decisions, the only thing they cannot replace is ethics. No algorithm understands compassion, and no model can measure the value of peace. If we lose that, no matter how much technology, how much wealth we possess, we will still be rich people walking in the dark. Imagine a day when money is no longer a tool to prove power, but an instrument to create shared prosperity. Then, perhaps, history will look back at this century not as a period of conflict, but as the moment humanity first learned how to place trust before fear. When we fold the final pages, we cannot view Financial CW merely as a book about finance or geopolitics. It is a reflective mirror, showing how humanity operates with trust, something inherently more fragile than any currency, yet the foundation of every system. The book speaks less about money and more about people, about greed disguised as ideals, about fear hidden in policies, and about the lust for power that always paints itself as righteousness. The deepest lesson here is not about who wins or loses between the two superpowers, but that every financial empire eventually has to confront the truth that money cannot buy trust. Trust cannot be printed, cannot be stored, and certainly cannot be maintained by threats. It lives in moral decisions, in the transparency of actions, and in how a society treats the vulnerable. As the world becomes smarter, faster, and richer, the question is not who dominates, but who deserves to be trusted. Looking deep into its nature, we recognize the paradox of our time. Never before have humans understood financial mechanisms so clearly, yet never have we lost their meaning so quickly. Money was created to serve people, but now, people work to serve money. The market, once a mirror reflecting creativity, has now become a stage for fear and speculation. And perhaps it is precisely when we think we are controlling the world that we are being controlled by what we have created. This book does not just question economic structures, but also raises an existential question. Will we use financial power to build or to destroy? That power can help alleviate poverty, cure diseases, create opportunities for millions, or it can become a tool to stifle their future. When an interest rate decision in Washington can send millions of families in Lagos or Hanoi into turmoil, we can no longer say that economics is anyone's isolated problem. Therefore, this book does not call for anyone to choose sides. It calls for us to choose how to see. To see the world as a network of trust, where one side's prosperity is only meaningful if it doesn't cause harm to the other. To see money not as a symbol of power, but as a reminder that true strength lies in the ability to cooperate. To look to the future not with suspicion, but with the awakening of one who understands the cost of confrontation. Perhaps, in the end, the most terrifying thing is not the collapse of the financial system, but the callousness of the human spirit in the face of warnings. We have grown so accustomed to crises that we treat them as natural cycles, while each cycle steals a part of the trust that we cannot regain. So, what question remains for us? As everything around us accelerates data, technology, currency, and even greed, can humanity learn to slow down and think? Do we have the courage to ask, what am I contributing to, building or destroying? Can a generation growing up in the age of AI understand that what truly defines the future is not computational speed, but the depth of trust? The world doesn't need another Cold War. It needs people who know how to warm up from within, who know how to stop before it's too late, who know that prosperity doesn't come from how much you can earn, but from how you use that money to nurture what truly matters.